Are you unknowingly making investment mistakes that could be costing you thousands of dollars? What if avoiding a few common pitfalls could dramatically boost your returns? Today, I'm diving deep into the top investment errors that might be draining your wealth and will be challenging myself to identify and fix my own before it's too late. Hello everyone, I'm Steven, your host at the Money Mentor Hub. With over a decade of experience in investment banking and as a key finance executive for Fortune 500 companies, I've seen firsthand how small missteps can lead to significant financial losses. Stick around, because by the end of this video, you'll learn how to sidestep these pitfalls and secure your financial future. When it comes to investing, we all aim to maximize our returns and grow our wealth over time. But the harsh reality is that many of us are unknowingly making mistakes that can cost us thousands, even tens of thousands of dollars. The good news? By being aware of these common errors, we can take proactive steps to avoid them and safeguard our financial well-being. One of the most prevalent investment mistakes is letting emotions drive decisions. We've all felt the urge to jump into a soaring market or to panic when stocks plummet. However, emotions have no place in sound investing. Another frequent error is skipping thorough research. Spotting a hot, new stock and diving in without due diligence can lead to disastrous outcomes. Lack of diversification is another major misstep. Putting all your eggs in one basket amplifies risk. Lastly, neglecting a long-term strategy leaves us chasing short-term gains while neglecting our overarching financial goals. Let's delve deeper into why these mistakes are so detrimental. When we make emotional decisions, we abandon rational analysis, leading to impulsive actions that can cost us dearly. For example, investing in a trendy stock without research might result in significant losses if the company's value drops unexpectedly. Failing to conduct proper research means we're not giving ourselves the best chance at success. Investing in a company that appears solid on the surface but is struggling financially can erode our investments. Lack of diversification exposes us to unnecessary risk. If we invest heavily in one stock and it declines, our entire portfolio suffers. Not having a long-term strategy means we're not aligning our investments with our future goals. This lack of planning can lead to inconsistent results and hinder our ability to reach milestones like retirement or funding our children's education. But here's a critical insight that can help us avoid these pitfalls. Developing a solid, personalized investment plan. This plan should reflect your individual financial goals, risk tolerance, and time horizon. By having a clear roadmap, you can avoid emotional decision-making, ensure proper diversification, and make informed choices based on thorough research. For instance, adopting a strategy to invest in a diversified portfolio of low-cost index funds can help you ride out market fluctuations and stay focused on long-term growth. This approach minimizes risk and reduces the temptation to make impulsive trades based on short-term market movements. Another key strategy is to automate your investments. Setting up regular, automatic contributions to your investment accounts enforces discipline and takes emotion out of the equation. This also allows you to benefit from dollar-cost averaging, smoothing out the impact of market volatility over time. Now, you might be wondering, how do I start creating this personalized investment plan? Stay tuned, because in just a moment, I'll share practical steps to help you build a robust plan tailored to your needs. Educating yourself is equally important. Staying informed about investment principles, market trends, and financial news empowers you to make better decisions and adapt your strategy as needed. By continuously learning, you stay ahead of the game and avoid costly mistakes. Remember, the key to successful investing lies in focus, discipline, and continuous learning. By being aware of common mistakes and implementing strategies to avoid them, you can potentially save or earn thousands of dollars over time. If you're finding this content valuable, please give this video a thumbs up and consider subscribing to the Money Mentor Hub. Your support helps us continue providing insights to help you achieve financial freedom. Now, as promised, let's discuss how to create your personalized investment plan. Define your financial goals. Determine what you are investing for: retirement, a house, education, or financial independence. Clear goals set the direction of your investment strategy. Assess your risk tolerance. Understand how much risk you are comfortable taking. This will influence your asset allocation between stocks, bonds, and other investments. Diversify your portfolio. Spread your investments across different asset classes and sectors to minimize risk. Consider a mix of stocks, bonds, real estate, and other assets. Choose the right investment vehicles. Based on your goals and risk tolerance, select appropriate investment options like index funds, ETFs, or individual stocks. Set up automatic contributions. Automate your investments to enforce discipline and consistency, leveraging dollar cost averaging. Regularly review and adjust. Periodically assess your portfolio's performance and make adjustments as needed to stay aligned with your goals. By following these steps, you'll create a solid foundation for your investments, helping you avoid common mistakes and stay on track toward your financial objectives. I'd love to hear about your own investment experiences. Have you ever made any of these mistakes, and how did you overcome them? Share your stories in the comments below. Thank you for watching. Remember, being proactive and informed can make all the difference in your investment journey. Before you go, be sure to check out the video appearing on your screen right now. In it, I delve deeper into smart investment strategies that can help you grow your wealth over time. Trust me, you don't want to miss it. See you in the next one.